Tariffs is something that can really play spoil sport. I mean, how much does India really export to the US? It's very little. The RBI is very keen that between inflation and growth, it wants to focus more on containing the drop in growth.
Sure.
I think the government is also very clear that growth remains like a primary mandate. Sectors that we are very bullish on, like I said, financials are our number one pick, followed by sectors such as metals, which are showing promise. Other sectors such as FMCG, consumer durables, consumer staples. These are some of the sectors that we want to bet on.
Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, and on today's episode, I'm welcoming for the very first time Axis Securities. I'm talking with Akshay Chinchalkar, Head of Research at Axis Securities. Akshay, welcome to Paisa Vaisa. Thank you so much for doing this for our audience.
Thank you so much, Anupam.
It's great to have you here because, long ago, we've had like Axis Bank, we've had Axis Mutual Fund. The first time that we have Axis Securities. So let's start with the background of what exactly is Axis Securities. I know that it's part of the bigger bank franchise, but tell us more about it, please.
So Axis Securities is a 100% subsidiary of Axis Bank, which is India's third largest private bank. And we're in the bread and butter retail broking business, offering a range of products from equities to commodities. Axis as a house has been in this business since the ENAM event happened. And it's been a good journey for us with the markets being kind.
What's your product range like, for our audience out there who probably hasn't heard of Axis Securities or has and is interested in knowing more about the products that you offer? Discount or full service or?
We're a full service broker offering, the standard bouquet of services, cash markets, derivatives, commodities. Currency futures were a thing until the RBI clamped down on currency trading a couple of years ago. PMS, advisory, research, all of the stuff that you typically hear about when it comes to a full service broker.
How has the brokerage industry been doing in the last few years? You had 4 years of what looked like a bull market and a lot of people entering in, a lot of retail interest, mutual funds growing, demat accounts growing, trading accounts growing. This year, has there been some kind of normalization? And of course, the whole F-ender story that now seems to have paused a bit. Any thoughts on that?
Clearly, that's having an effect. I think the markets, have done so well that there was certainly a bit of exuberance on the upside. So many retail accounts, demat accounts being opened, so many retail investors, some with experience, some fresh out of the oven, so to say, getting into the markets. So yes, September, was the peak of the bull market, as we know. 6 months down, things have slowed down. Regulation is something that a lot of people are talking about because the SEBI has been very clear about how it wants to clamp down on excessive speculation. So clearly that's showing, but the show must go on.
Akshay, what's happening at Axis in terms of your research? Any themes that you guys are exploring? Anything interesting?
Axis as a house has always focused on research, fundamental research to be precise. But one of the things we are consciously building now is data-driven research.
Nice.
Where we're looking at history and we're saying if something similar to what's happening now has occurred in the past, we have a template for how that panned out, right? And we're using templates like those to kind of make the case that if this is an event similar to what happened in the past, here is what is expected with this amount of probability. So that kind of research is now getting a lot of eyeballs from the investing public because like someone famously said, data is the new oil. So why not?
Akshay, for the benefit of our audience, that this recording has been on the blog for some time and it's finally happening today. I remember when we started and we were talking about what to talk about, the tariff issue didn't exist then. And here we are recording this today. We just explain and try and make sense to our audience of what exactly is happening in the world on the tariffs part and the impact it's having in the stock markets.
So what is a tariff? It's nothing but a duty. If there is a country that's, exporting goods to your country and if and the more the import that comes into your nation's borders, the larger the bill that you'll have to foot. So at some point you might think, look, the dollars that are going out of my country as an importer nation are too much for my comfort. And therefore I want to make it a little more expensive for those foreign goods to come into my nation. And therefore you make it more expensive for importers in your country to import goods from the other nation. When that happens, obviously it has an effect on that other nation's revenues as well. As importers, say, okay, I'm going to not import as much from you anymore. You will actually have to produce more of, those goods in your own nation, which can increase the cost of production in your nation. It can also result in a slowdown in the other country because they're not able to send as many
Yeah,
goods
yeah.
as before. So it can have a ripple effect. And like you said, right, I mean, we were supposed to do this like a month ago now. Tariffs are, mainstream news. How it's going to really pan out, the specifics are yet to be known because Trump decides his policy on the fly.
Mm.
So that remains a concern. But I think eventually the US will have to think about whether, imposing, very, very high tariffs on other nations will make it difficult for the average American to produce goods at a lower cost.
Yeah.
And if that happens, then I think, most of these countries will have some chance with negotiations, which I think are already underway. Yeah.
Let's start with your market outlook. Has that changed from where it was when you started this year, calendar year 2025? You had a certain outlook in Jan. Here we are in April, but whatever. So sitting here for the next 1 year or medium term, whichever time frame you choose, what's the market outlook for Axis Securities?
If you ask me, are we going to make a new high? We are.
Okay.
And I remember in September, we peaked out close to 26,300. We're at about 23,000 right now. Have we seen the low? It's too early to call because the global situation is very fluid and it's very headlines driven. So any headline out of the US, when we're asleep can really, move the markets a lot the next morning. Having said that, I think the bulk of the bad news is already priced in. And if we look at tariffs as something that can really play spoil sport, I mean, how much does India really export to the US?
Yeah.
It's very little. So I think in 2023, we exported about 84 billion worth of goods to the US, which is like 2.7% of their total imports.
Yeah.
And I know they levied like tariffs of 26% on India. Now they've scaled back because they've got that 90-day pause. The baseline tariff of 10% still applies. So now people are thinking with, India's exports to the US, such a small number, I mean, has the bulk of, the bad news already, been priced in? And that is our view. I think it's already priced in. If you look at what the domestic situation is, the RBI is very keen that, between inflation and growth, it wants to focus more on, containing the drop in growth.
Sure.
I think the government is also very clear that growth remains like a primary mandate. So given all of these, when you look at the summation of everything that's happening, I think the case remains very strong for the Nifty to make a new high in the next 12 to 18 months. So we continue to believe that, the worst is either behind us or is very close to, going into the past.
Okay. Looking at the economy from where we are, growth trends, we finished FY25. I think the RBI tweaked its GDP growth for this year from 6.7 to 6.5. And FY25 is over. We've already started on FY26. How is the macro looking to you for India going forward?
There are certain pockets where we see a slowdown, but broadly speaking, I think liquidity conditions are now benign compared to where they were 3 months ago. And I think most people are, thinking of what the RBI's actions have been over the last couple of months. We've had a new governor, and he's been very vocal about how, he will let the currency really find its own, value rather than intervening too heavily, because that does not send a good message to global investors. At the same time, I think the focus on growth is a lot more than it used to be in the previous regime. So I think, if liquidity conditions continue to ease, the slowdown that we are seeing in certain pockets like urban spending and to a large degree in rural spending is likely to be in a very, very mature stage. So I think speaking economic growth, there might be a lull. I don't think we're going to fall through a floor, but the uptick is not too far away in my sense.
So if you could just break down that into sectors, that Axis is tracking, sectors it likes, sectors it's cautious on, to help our audience to get specific actionable insights, that would be helpful.
Sectors that as a house we're bullish on are lenders. That includes NBFCs and banks, particularly private banks. We're not very gung-ho about auto, not very gung-ho about tech sector, stocks, for obvious reasons, because if discretionary spending by IT firms comes off, then there'll be some knock-on effect on Indian firms as well that are servicing those clients in the US. Not very gung-ho on healthcare, which might seem a little off because healthcare is considered to be a defensive sector. Sectors that we are very bullish on, like I said, financials are our number one pick, followed by sectors such as metals, which are showing promise. Other sectors such as FMCG, consumer durables, consumer staples. These are some of the sectors that we want to bet on.
If I just break this down into capex and consumption, what do you want, how you guys looking at that? Any interesting data, as you said, that you're tracking that gives you some confidence in India's growth or slowdown, whatever the case might be? Consumption, there are mixed trends. Capex, there's been some debate on whether the government is, pushing through the same numbers that it did in the last 3-4 years. Any thoughts?
Capex is still a sticky area. Consumption, I think, with all of the announcements that came through in the budget, I think the writing is on the wall. The government really wants consumers to spend, which is why it's decided to leave more money in the hands of consumers. Now the question is, will consumers spend? And I think that's where what the RBI does from here becomes so pivotal. I think the central bank has already cut rates a couple of times from 6.5%, which was the high, before it started cutting. And very recently it cut rates by another 25 basis points to 6%. The market's expectation is we will have another 2 rate cuts of 25 basis points each before the end of the year.
Okay.
So if that happens, then there is all the reason for consumption stocks to do well.
So we'll be at about 550.
550 thereabouts, yeah.
Yeah.
That's what the market is thinking.
Transmission has always been an issue, and you're part of a bank, so I don't know what are your thoughts on this, because money is still expensive. Whether that rate for interest rates to start going down, will that start at any point of time soon? Or
we're hoping it will, but Anupam, I think it really depends on what the global economic situation looks like in like 6 months. There's a lot of headwinds out there. Some firsts, and I'll give you an example. Now, historically, you've seen that whenever the global system is in some sort of pain, the dollar tends to get some safe haven flows. That's not happened this time, right? So equities have fallen and the dollar has also fallen. So then the question is, what happens to the safe haven of the dollar in US government bonds? So clearly, Trump's announcements have unnerved a lot of investors, and they've really shaken, historical correlations, which have held pretty well.
Yeah.
So it's a very fluid world, and, everything is so event-driven, everything is so headlines-driven that I think, it's like saying, okay, I still think I should be risk on, but if maybe in a normal world, I would allocate like $100 of my available capital, I'd probably go down to 50 this time.
Yeah.
But I'll still have some skin in the game.
Sure.
Because, the US economy has always mattered, and now even more. So,
By any chance, you try gold? I mean, you were talking about
yes.
safe havens. So I thought, let me ask you about gold. What do you think about gold? What's happening? There's seems to be the end of the world. Everybody's buying gold.
Yeah. Gold seems to tell us that we're close to, an end of the world sort of scenario.
Yeah.
But I remember somewhere, in March of 2023, we were close to $2,000
on gold. Yeah.
Now we're at 3,200.
Yeah.
And the last, I think about $500 has been near vertical. That kind of a rally typically tends to be the result of one thing, and that is excessive fear or disbelief in, the financial system as it stands. Are people, over leveraged on the upside? I think they are. And so therefore, if we have, not so harsh announcements coming out of the Oval Office, there'll be very little reason for people to continue remaining long gold. So, I mean, if you ask me at 3,200, would I be aggressively long? No, I think it'll give me sleepless nights.
Okay.
And I crunched some data this morning, and I can tell you its long-term momentum is now at a level which has only been seen 5 other times in the last 50 years.
Wow. Okay.
And historically, whenever that's happened, 3 months out, gold prices were always lower.
Okay.
And one thing we have learned from history is that history may not exactly, replicate itself, but it certainly rhymes in certain ways. And so a 4 to 5% drop in gold from here will not surprise me, at least.
Moving back to the Indian markets, 2 things that I want to talk about. I mean, under the broad topic of liquidity, right? The first is at an institutional level, how have FII flows been? How have domestic flows been? Because there's a lot of discussion on that in the last few years. At one point of time, domestic flows weren't really that big.
Yeah.
I'll come to SIP flows as the second part. But let's talk about this debate of FII versus DI. Foreign institutional investors versus domestic institutional investors. Any thoughts on that?
See, a typical foreign investor, Anupam, has the mandate and the bandwidth to invest in any market that offers an opportunity. I agree this has been, a discussion of debate for a very long time. Now, when you think of an FII, he's looking at markets like China, he's looking at the US, he's looking at India. And it's not just, for him, it's not just about how much money will I make in a certain stock market. It's also about, is the currency, stable enough? I mean, if there is a liquidity crisis or anything that happens and I have to withdraw money out of a certain country, will there be enough liquidity for me to pull out my funds in time without having a rather dramatic impact on the currency? Now you think of China and India, because that's another debate that people keep having. And what that tells me is that China has been a bear market for a really long time, right? Couple of years at least. And valuations in China dropped to such a level that you really, if you had a global mandate, you had to question as to why you're not in China, right? The regulatory crackdown, the focus of the government to bridge the income inequality. And they did everything that was necessary to kind of, bridge that gap. So China, until about 6 months, 8 months ago, was trading at valuations which were at multi-year lows.
Sure.
As opposed to that, the Nifty was, I think, in terms of forward earnings, trading at like 25x. So somewhere you need to think that the rubber band is probably too stretched in that one direction and cannot be stretched anymore.
Correct.
And therefore, it was very natural for someone, who has the bandwidth to deploy money anywhere to think, India, I've already made money in India. Here's an investable opportunity that is so huge coming out of China. Does it make any sense for me to reverse that trade? And that's what they've done. And with DeepSeek happening in November, I mean, the world woke up to the fact that China is also, a contender in the AI race for supremacy besides the US. And I think that was like the catalyst that really, had a lot of foreigners, do a relook of China. So in that sense, I think FII's selling is... it's been huge. There's no denying that. But I think it's reached a point where FIs are now thinking, are we close to like average valuations? If you look at the last 10 years of data. Yeah. And I think they're close to that number. Yeah. I remember sometime in January, FII's short positions in derivatives were very high. So they're hugely negative India. But that short position has been reduced dramatically. So maybe they're now thinking that there is value in certain pockets which we don't want to miss out on. So, yeah.
So before we go into the break, SIP flows, the whole movement of the Indian mindset from becoming, what do they say? They call it becoming an investor from a saver. And whether, it was FDs and now it's the stock market or it's a mutual fund, SIP flows, 12,000 crores a month upwards. You see any risk to these flows? Because there hasn't been anything. It's been steady. It's been vertical. I think we had started, from what I recall, at about 1,000 rupees per SIP per month. Now we are at about 2,000 plus. And the book is just growing and growing and growing despite market volatility, despite a lot of things. That there are some issues in the internals. I don't want to get into that. But you think this changing investor behavior and hence the SIP number, it's here to stay?
Well, that's a tough question. So March was 49 straight months of inflows. Yeah. And I think the March number was about 25,000 crores. Yeah. It's come off the peak. At the peak, it was roughly 42,000 crores, but still sizable. Okay. Even with the 40% drop. I think SIP flows are here to stay unless we get like a 6-month or longer correction. Because, retail would want to be, they say they want to be invested forever because they look at all of these legends who've made money by not timing the market, but spending a lot of time in the market. They want to do that, but do they really? The data does not support that. So if the market does nothing for the next 6 months from here, then I think we'll see some real slowdown in SIP flows. But until that happens, I think 49 straight months is some record, right?
Yeah. And
so clearly the democratization of savings is well underway.
And there's scope. If the markets continue to perform, there's enough scope for
money should come back.
Either existing SIPs to increase in value or new people coming in. There's still enough scope for that. Folks, on that note, we're going to take a small break. On the other side, we'll talk about more interesting themes in the stock markets. Don't go anywhere. We will be right back.
Did you know Indians report nearly 800 cases of online financial fraud every day, which has resulted in losses exceeding 1,000 crores in the last 5 years? To keep you safe from such fraud, I am starting my newest podcast series, Conversation with Vigilante, an initiative by HDFC Bank. In every episode, I will feature special guests who can share expert insights on the different types of fraud, their modus operandi, and how you can protect your money. Stay safe, stay vigilant, and don't forget to tune into Conversation with Vigilante. Catch the episodes on all audio streaming platforms and V for Vigilante YouTube channel.
Welcome back. Akshay, let's talk about specific themes. To me, new age is one theme, right? Because this is a completely new sector that has come in a very big way, because you've got something like a Zomato that is part of the whatever. I think Sensex and the Nifty.
Hmm.
From what I can recall, no company that's been less than 10 or 15 years old has ever made such an entry there. And I don't know whether it's making losses or profits or whatever. That's a different discussion. But new age as a theme, what do you think about it?
The word that immediately comes to my mind, Anupam, is digitization and convenience. And the premiumization of some of these things. Zomato is, as a company, is how old? I think they went mainstream during COVID for obvious reasons.
Yeah.
But I think in terms of what they've been able to achieve, the number of people using Zomato has only grown exponentially. And we are now living in a world where, how many subscribers you're adding is starting to matter much more than are you actually making money. Because eventually people think if things come to pass, you will end up with some profits. But until that happens, I think it's just about, are you adding enough subscribers on a month-to-month basis? And given how much the average Indian has been used to, just this aspect of convenience, I think the story is here to stay.
Yeah. Do you guys have coverage?
Zomato, no, we don't.
Yeah. But as a space is something that you're watching.
We're watching it very closely.
The thing is that I'm just, there are disruption themes in the market that are very fascinating. You look at age-old franchises like maybe an Asian Paints, again getting disrupted by newer players. You've got this entire Zomato theme playing out. Thankfully, I think banks and NBFCs are still behind some very
thank
strong,
God for that.
very strong barriers of regulation and size. The other thing that always comes to my mind is the new age guys then getting disrupted themselves.
Correct.
Any thoughts on that? Quick commerce, shaking up this entire thing.
No, I think, look, one thing that, this ecosystem promises is a low barrier to entry. So if you are someone who can come up with a snappy idea that, promises convenience, you're just going to be out there competing with, the who's who, so to say. So I think as a theme, digitization is only going to grow, which is why companies that are operating in fintech or some of these quick commerce entities will continue to be a very important aspect of our coverage going forward. At least, even if we're not covering them, we would want to really know what's happening in that space.
Okay, let's talk about AI, right? I mean, it's everywhere. Now, how to figure the impact of that on the markets, on sectors, it's a little bit dicey. But for our audience out there, how do you think AI can help them?
I would think of AI as a facilitator, not as a replacement. I'll give you an example. Let's say 10 years ago, if I wanted to know, which consumer of mine is, consuming what kind of data, what kind of research do they really want, I'd have to hire like 2 people to get the job done and then present their findings to me. Now with AI, it can happen at the click of a button. So in terms of making the whole process more seamless, faster, that's where I think AI can be most leveraged. Is it going to replace humans entirely like it was shown in the Terminator movies? That's not going to happen.
Nice reference.
I'm not buying into that idea at all.
Now, just winding down the episode, specific advice for our audience out there on how to handle their portfolios. Let's look at 2 case studies out here. One is of an existing guy, young guy, who's, probably he was told that you have to maximize equity because you're young, you've got a long, you've got a long runway, etc. The guy
has a larger risk appetite.
Maybe came in, maybe not during the COVID fall, but at least in the last couple of years, sitting on maybe a CAGR, of 10-15% per year on his investment. But suddenly now, with all this volatility of the last 3 or 4 months, what's your advice to him and her for keeping his portfolio treating it in the next, at least for the longer term? Should he stay on track? Do you have any other advice for him?
For that sort of a profile, I would say keep the bulk of your equity investments in large caps, because large caps may not give you 3 or 4 times, sort of returns over whatever duration, let's say a 2 or 3 year period, but they will also protect you on the downside when the cycle turns. And one of the things about the markets is that they're cyclical. Drawdowns of 10% in a year are quite the norm, if you ask me. Now, what happens is when the blue chip benchmark falls 10%, it is reasonable to see the small cap and the mid cap indexes fall like 25-30%, whereas individual stocks get pummeled even more. So if you cannot take that kind of risk appetite, you can't have a situation where you want 3x returns, but you're not willing to fathom like a 50% drawdown. Now, how many people can really, work with that kind of a mix? So my suggestion is keep 50% in equities, ideally tilted towards large caps. 30% allocation in gold is necessary given the kind of world we're living in. And with Trump even more so. 20% in bonds because they kind of offer you like a buffer when, things are not going as per plan. Okay. So 50, 30, 20 in that order.
Okay. And for someone who's just heard this episode so far and has never, ever, ever either opened a demat or an SIP or a mutual fund folio, but is now interested in entering into equities. What's your pitch to him?
I would say go via the mutual funds route.
Okay.
Because you have a professional fund manager, kind of looking at the markets on a daily basis, knowing what to scale into, what to get out of. As an individual investor, you may not have the bandwidth to be doing this on a regular basis. So trust people who've done it for a long time, have seen multiple market cycles. That's when, you can get a good night's sleep.
And since Axis specializes in retail, that part, for the people who are considering choosing between a discount brokerage and a full service brokerage, what's your pitch to them? How should they look at this for someone not doing F&O strategies and all that, but a serious investor who wants
Interested
to
in
now
the cash markets.
look at investing in markets? He's done the mutual fund route. You've convinced him. He's done his stuff. Now he wants to figure, okay, now I want to step in, maybe with baby steps. Okay. But I don't know what's the difference between full service and, discount. So help him there. Help him over there.
So a discount broker is someone who does not charge you brokerage. He may charge you a certain fee for using his app, for example, but he or she will not give you research. Whereas a full service broker like Axis, so like I said at the start of the episode, one of the things that is our strength is research. And we produce all kinds of research, but our focus mainly is fundamental research. Now, if you are looking for those longer term ideas to come to your table every now and then that's really the model that you need to, think about. The question is, as a long-term investor, are you looking at making money or saving 10 paisa on a trade? I think the answer is pretty simple. You want to make some steady returns over time, which can help you plan for many things, your kids' education, your own retirement. And in that sense, I think a full-service broker can be a better bet.
What are the commission rates nowadays? It's been a while because I haven't taken a new broker for a very long time. I don't do too much of trading or investing also. Whatever is there. But what are commission rates like these days now, at least for Axis?
I think, with the advent of discount brokerages, those commissions have really fallen. 10 paise, on a 100 rupee trade is what, is doing the rounds.
Sure. What do you think sets apart a brokerage? If you were to choose the first three things, now that, let's say that our viewer has figured that he wants a full service thing.
Sure.
Okay. What are the top three things he should look for? He's choosing between a whole host of brokerages out there to open his account. What would be the top three or top five, or just make a checklist of what someone should look out for when opening a brokerage account?
First is the ease of, opening an account. We are now living in a world where you can go from not having a demat account to having one in like under 15 minutes.
Yeah.
The second thing is the quality of research. You don't want, your client to be trading, on a daily basis. You want him to make some steady returns.
Sure.
So pick a broker whose research is top quality and who focuses more on investing rather than speculation via derivatives. And third, and equally important, I would say, is the power of the trading, facility that you offer, the app, the experience. I mean, what you really want to communicate as a provider of this solution is that my app is hassle-free and anyone, whether he's a 15-year-old or an 80-year-old, can use it as seamlessly as the others.
So now we've got two standard questions that we throw to all our guests who come here. The first is what we call the career corner. Talk about careers in your industry. What are the careers? Who is it for? And what are usually good educational degrees to have, if you want to look at this?
Yeah. So, I mean, in the broking industry, I can immediately think of three careers. One is, the guy who sits on the dealing terminal and then trades on your behalf. So you call up your, relationship manager and you say you want to buy or sell anything. And then he basically, helps you undertake that transaction. So that's one.
That's one.
The other thing is obviously research.
The analyst.
The analyst.
Two. Essentially
someone who's an MBA and has a CFA or some other additional certification becomes a good proxy for a research analyst sort of a position. The third is a quantitative analyst.
Okay.
Someone who loves working with numbers. Someone who's really good at statistics, data visualization. Because now, Anupam, the need of the hour is to say the story in as little text as possible and use more pictures. And we are seeing a clear pivot from people who were okay with reading 20 pages of research maybe 10 years ago to someone who says, I've got 5 minutes, you tell me why I should be looking at this content from you. So as long as you can reduce the text and leave him with a clear takeaway, you've cracked the code. So someone with that kind of skills will definitely make a mark.
And the last and final of all our standard questions, what, you came in with a book on Python, but any other book that if you want to recommend that book, that's also cool, by the way. Any other book that you're reading that you'd like to recommend to our audience?
Okay, so this was not planned, but I think Devina Mehra's latest book
Interesting.
is a great book.
Her very first book also, I believe.
Yes, I think so. I'm on page 50 of that book, and it busts myths about investing like no other book. I recommend it very, very strongly.
Fantastic. That's a good recommendation. And folks, on that recommendation and talk of careers, that is a wrap on this episode of Paisa Vaisa. My guest, Akshay Chinchalkar, Head of Research at Axis Securities. Akshay, thank you so much for doing this for our audience.
The pleasure is all mine. Thanks for having me.
Thank you.